So just in the beginning, I would say that there won't be exams. So, so it is like a course, but you have to feel like open and ask questions. No exams. Okay, it's about me. I am a lawyer by my occupation and attorney, but in fact I have spent all my life with investment banking as well. I was a lawyer, but dealing with that type of deals, so both in-house and law firms. So that's why I am speaking about portfolios and doing these syndicates right now. So the message from us is that startup investments as a category is nothing unique. It is actually one type of an asset which reasonably could be considered as a part of any portfolio you are building. For example, if you have your own family office, you have to decide how to diversify and what asset classes you are investing in. So you may have some bonds, you may have some loans, you may have some real estate, some whole package of different assets. And one part of this also may be in some gold or some more exotic assets. And in a sense, this alternative asset also is startup investment. So yes, it depends on your risk appetite and also on your age. As usually banks try to argue that so you have to either do the portfolio more risky or less risky, but if you are young, you can do more startups, and if you are older, maybe less of that. So usually what we tell our members that when you consider investing in startups, the exposure to these assets should not exceed like 10-15% of your whole portfolio in terms of value at the investing date. Because of course this is risky asset and you have to be ready to lose that investment as previously told. This is quite risky asset class. But of course it can also generate quite high returns. So risk and return also. It is not that easy to find good investments in startups. So that is why and also this is your first step in investing in startups if some of you will choose to do that. But you have to learn by time and by doing. You will see in Latban or with some other organization how the process goes, how the research is being done, how the founders present themselves, and by doing you will see what are the main in practice the points which Maria was speaking about, how does in reality these show up. So the plan, for example, if you have 10% is, for example, 100K, you can afford to invest in this asset class, so you have to split in quite bigger number of startups. It can be 20, it can be 10. Different speakers say different numbers, but at least 10 probably should be the minimum you should do. Of course, 20 is better. What we usually tell our members that, of course, better to start with smaller ticket because all goes with learning also. Another important aspect, similar like in stock investing, is that you define what you are investing in and stay with that idea all the time. So you define your investment thesis, what exactly you are investing in. Either this is some group of assets of your specialty you know about. For example, we have a member of Latban who is expert in medicine, so he's doctor himself. So what he does is he is looking at different medicine-related startups, and he focuses on them and invests relatively large tickets in these. But what often happens is that there are some trends, AI, some big names being presented for huge valuation that you can buy both. You should do it right now. It's your last opportunity, as in every other industry. So you have to first look at the numbers and then do rational decision in that. As an Angels, we of course focus on pre-seed, which is the earliest stage. You will see the examples later. But of course, we can do follow-up investments in seed as well. If you will work with some funds, they will also offer you some later stages, but we usually don't focus on that. Yes, geography, of course, is also of major importance. We here focus on the geographies which are close to us. We have defined that these geographies are Baltic states, because in these countries we know how the legal system works, we know the people, they can come to Riga, we can go to Vilnius or Tallinn, we meet them regularly, so it is easy to be within reach of that startup. And in fact, we are lucky here because the ecosystem is pretty active. In many much larger countries, the ecosystem is not that active as it is in Baltic states. So you have plenty of opportunities to find. And yes, we try to find the best of them. Yes, check size. Yeah, these are like other aspects. What could be the thesis? As I already mentioned before, you can define that you are investing, for example, depending on your budget, like small tickets in every year in a few startups which you consider the best. Just wait, look at the opportunities which arrive, and then do your best decision which startup to invest. You can do some other strategies, for example, focusing on IP. For example, there are funds, not Outlast, but other funds who target very valuable IP related startups, because they believe that even if the startup goes bust, there is still some asset which can be sold, because usually there are no other assets than IP. For us, as a Latban, we usually try to focus on Baltic startups, as mentioned, and we have defined also the return we expect from our investments. It is we want to reach 3x within 3 years. So it is pretty aggressive, but we are going very early, and we believe that we can reach that number. And at least for now, we are doing pretty good. And another important aspect what we are doing due diligence at all times by ourselves. Because in many cases you will see the angels and the funds themselves, they do not really do due diligence themselves. They have some relations with some other funds, and they follow the good leader they trust, but they don't really invest their time in the particular opportunity. But we invest that time. Yes, about 10 deals I already mentioned. Yes, also that fact that it is not that easy to deploy the capital. For example, last year we did 6 syndicate investments within Latban. So even if you want to invest in every of them, you will still not be able to build the portfolio of 10. But of course there are other organizations similar as Latban, for example NGL, where you can also see where they are investing and what opportunities they are providing. Yes, and the important thing what we are doing is that since we are doing syndicates, we spend quite a lot of time individually with the startup. And that brings also some results, because for funds, usually one of the biggest problems is that they cannot really do a tailored approach to the company. But the situations are unique in many instances, and they require fast action, especially in the startup environment where a few months can divide the possibility of life or death. So we as an angel group, we can fast mobilize some additional capital, invest until the round, and then the startup survives, and maybe we win quite a lot by doing that.
How does hands-on work in a syndicate? I mean, you have 10 people.
Yes, in practice it works like that we have a syndicate leader who manages that syndicate, and these leaders are the ones responsible for following that transaction. That is another and maybe one of the biggest benefits of investing in a syndicate, because you have the benefit of forgetting, but at the same time you know that there is some person who takes care. And that is important. And that at the moment where your attention will be needed, you will be called and your attention will be focused on the problem at hand. Okay. Yes, this is about the stages, of course. Avoid concentration, hardware, software, AI. Right now, I would not agree with Mario on this aspect of that you must have 2 founders at all times. Right now with AI, there are instances, and they seem to be realistic, that there is also possibility of one person building a quite good company. We have at least one startup we are considering with similar that type of business model, because he has done all the programming himself, especially in these wrapper cases. There is no need for a very big IT team behind. But of course, there are additional risks behind that model. What we do in practice where we get the deal flow is we are LPs in these bigger funds. We as a Latban group, we have invested both in Outlast, both in Build It fund, we have invested in First Pick. So actually we have knowledge about their deal flow. And on top of that, we as an organization take part in all big startup competitions which happen in all 3 Baltic states. And there we see quite very big numbers of startups participating. For example, the last syndicate deal, which is now being negotiated, Ybill, it also came from the most recent startup competition, which was TechChill a week ago. Yes, but still it is quite a lot of screening work to go through all these pitch decks and to understand the best ones. And quite recently, with some increase in reputation of Latban, there are more also startups which are choosing to come to us maybe at the first place. Yes, these are like traditional points about the winners who drive and that all the others lose money only. But you will see here that the mathematics is not that really you have to write totally down these 50% or whatever big part, big chunk of startups. Of course, many of them lose steam and may not deliver the multiple you expect, but at least from part of them, they at least recover at least part of the investment. So sometimes there is this stereotype that you have to write down completely largest part and you have to wait for one boat who recovers it all. In real life, it is not that extreme. It is still quite some startups who maybe pivot to some more traditional business model. Maybe they had some brave fintech ideas, but they end up as good lending company. So at the end of the day, you have shares in a reasonable lending company, which may be sold later with some multiple. Of course, maybe not 20x. But of course, there are some which end up greatly and so deliver the returns. So 20% IRR or even bigger during the lifetime of that syndicate. We at our syndicates focus on approximately 5, 6, 7 years, which is less than for funds. There are two key strategies which differ, and there are positive benefits for each of them. You can buy at the lowest possible valuation, put your ticket in, and for do not continue investing in that, because of course from the perspective of multiple, if the company succeeds, then of course you will be able to write down that you have received like 20x and successful exit. But there are more cautious strategy as well, that you don't invest everything at the first place, but maybe invest smaller check and later do follow-up investment at a later stage if the company raises again. What we see in practice is that there is a theory that companies are bought at that or that stage or end up with IPO, but in practice there are very different scenarios how they end up being acquired. There are situations where strategic buyer comes in very early and you have to negotiate with that buyer to buy you out, because the startup somehow becomes not interested in raising high numbers anymore. But at the same time, it has a big benefit of having a strategic partner and not being able to become lose money. So these are these strategies in specific numbers. For example, if you invest in the beginning and you receive this big multiple, then of course you can book that you have received 24x and earned 2.4 million. But in practice, in mathematical terms, you will earn a mathematically bigger number if you even if the multiple is lower, but you have done follow-up investments. So yeah, it depends on your strategy, of course. Because the startup can die not only at the first round, it can die at later stage as well. So there is no guarantee that if it raises second round or even third, it will survive later. There are these few aspects, fear of missing out, of course, that last opportunity to invest in SpaceX, so do it. Tomorrow, no other chance, IPO is coming, and yes, there are some offers also in our community to do that. Yes, you can also, what happens is that you invest in every startup which comes around, so you like deploy all the capital within like very short period of time, and then you can look what is there. But usually it's not that good if you do it fast. You should analyze what you have. Of course, friends, fools, and family. Sometimes it makes sense, but of course, don't invest in all friends. And there are sometimes very charismatic founders. They are really good at what they do, but it is not that easy. Maybe they are good sellers. They can sell their idea even to bigger population and group of business angels, but you have to calm down, look at the numbers, and then make like balanced decision whether to go with that charismatic person or not. Because of course this is great benefit if the startup has such a founder. But sometimes this is not what is needed only. Yes, of course, and you have to check your time, how you spend it with the startups. If you are with syndicate, then it is a bit easier because, as mentioned, there are some lead investors who deal on the daily basis with the startup. But if you do your own investments directly, then of course you will have to spend some time, follow what the startup is doing, and contact them. Otherwise, they forget about you and don't remember at all. So here it's a bit about what we have done as a Latban syndicate and as an organization during the last few years. We have invested in that group of startups. Some of them are delivering very nice results right now. Some have stagnated for a while, but now the results are growing fast. Some have received already some strategic investment. Some are trying to pivot, maybe change the strategy. So I will not go into detail in every of them because we are recorded, but actually I'm quite proud about the results we are having, at least right now. And what else we have is that we have done this Autumn Feeder Fund, which is investing in all these bigger funds. So I think it is was good idea because Autumn is providing unproportional returns for private capital. So if they, at least some of them, succeed, Autumn will not ask for profit exceeding like cap of 5% per annum. So all the benefit, if it is bigger, will come to private capital. So this is what I wanted to
What does
tell.
it mean debt freeze? So like they are losing and you need
No. They have done quite an interesting thing. They have split their business in two parts. They have made a subsidiary. This particular company, they are doing like this is fintech. They are doing lending, but not based on some collateral, but based on cash flow. So they are analyzing cash flow of a company. Now it is a possibility with open banking to connect all your accounts of a company and see like a bigger history of the company. And they do algorithms and figure out how much money they can give to this small shop or small business without losing money. So what they have done, they have split the business in two parts. One is this IT part, which does the technology, and then they have also a company which is subsidiary, which does the portfolio, which validates the idea. So they are raising quite a lot of debt, paying interest also to investors, but at the same time they have this technology part as well.
Maybe you can also explain more about debt, like extra financing provided to startups like Cellbox Labs, like after initial investment.
Yes, that is something I already mentioned, that a good thing with syndicates and with angels in a startup is that we are a bit more flexible than a fund. Fund has investment thesis as well. They can do initial investment, they can do follow-up investments. So there are two parts, and they have quite long decision-making time span for that. In our case, we are more flexible. For example, in that particular company's case, they had one point where the company was very short on cash, and then we were doing like follow-up investments, like raising from the syndicate members and doing additional investment during some certain period of time to keep the company afloat. And after few months of doing that, the company was able to raise a big grant, more than 1.5 million, and so everything went again as it should have been. But there is some gap which was where additional financing was needed, and the founders did not have that. And of course, we have got some reward for doing that. So we got additional 5% in the company, which is very valuable right now. So we are doing deals. Yeah.
What is like the legal structure of Latvian syndicate?
We are doing them as alternative investment fund structures. So we are registering alternative investment fund for each of them. Small one, but yes, it is like registered with the Bank of Latvia and supervised. So
And then they are members of Latvian?
yes, we have alternative investment fund management company as well, ISP Asset Management. And under this ISP Asset Management, it supervises each of these alternative investment funds. And in each of these alternative investment funds, people invest, business angels invest, and the fund invests later in the specific startup. It is easy to operate, pretty fast, no need to report, like smaller administrative burden. These are not companies, these are funds which are registered only with Bank of Latvia. Of course, we have to do audit every year, but this is pretty it.
Also, maybe to note, the average syndicates usually are between 100 to 200,000, and I would say the average angel tickets themselves are 5 to 10.
Yes, somewhere. Right now, the median ticket probably will be like 10, but there are quite a lot of people who are investing 5, but there are, of course, who are investing 20. So that is the usual range. Of course, sometimes things happen and somebody invests 50, but usually it is in that range. The biggest ticket, I think, in one was 120 or even 150. But yeah, it depends. So that's it. If you have any questions, please ask.
Questions. Any questions, welcome.
Yeah, you mentioned about the ecosystem. The Baltic is very active. How do you compare with other?
In Baltic states, I think you will. Somebody will give the numbers, but actually Latvia lags very much behind, and Estonia has, of course, the biggest numbers in terms of attracted foreign investment in startup ecosystem. Lithuania is catching up and doing it very fast because in Estonia it also already started to stagnate. Probably it has reached the numbers where additional growth is hard to obtain. But in Estonia, in Lithuania, it's still growing. In Latvia, it's quite a lot to go. And as we are NGO, our also goal is to make the community work better and to provide more resources and maybe to improve these numbers as well.
Maybe also to comment on this, I will also send like a Baltic startup funding report in WhatsApp and email, just showcase the numbers. But in terms of like last year's, let's say, data and trends, Estonia has kind of in the past 5 years reached kind of its peak in terms of new startup teams developing, etc. And now most of their funding goes towards later stage funding, like Series A, Series B rounds. That is the place where they kind of are leading the whole Baltic states. But now, vice versa, if you take a look at Lithuania, they're at the position where there are new startups being formed, like tens of them, I would say, on a monthly basis. Like the amount of like new influx of teams and products being developed there is very high. Plus also the focus of foreign investments foreign investors outside of Baltics going to the Lithuania has also proportionally increased. I think now like 55% of their investments come from foreign investors. So they actually are gathering a huge amount of attention, not only to Lithuania, but also to the region, which also kind of is very much helping Latvia itself because we're kind of also are capturing the same attention. And in terms of the numbers, of course, this amount of attention has also kind of driven up the prices or let's say the pre-seed round levels plus the valuations. If you take a look, let's say like an average pre-seed startup from Lithuania, Estonia and Latvia, in most cases the Latvian startup valuation will be I would say a little bit lower than the Lithuanian ones because they're currently in, I would say, kind of a high peak of their ecosystem.
Yeah.
Yeah.
What we are trying to do, we are also trying to attract not only Latvian business angels, but business angels for Latvian communities in the United States, for example, in UK, and just business angels from these other European countries and the United States. We have pretty active business angels who participate in our events and invest actively. For example, from Bulgaria, from United States. So it is not like Latvian local organization anymore. These syndicates are more international. And if it started last year, maybe slowly, this year we already see that in Techjul it was very noticeable that more and more funds are coming and also wanting to speak with us, with Emils, that they are interested also to follow what we are investing in and maybe become members of Latban. And so
how do these companies find Latban, or how Latban finds the companies?
I can, I guess, more or less answer that. It's if you take a look at like 3 years ago, I would say 90% of the companies coming like at our events, or the ones that we're speaking to and trying to understand more or less, are the ones that actually find us through our website or some publications. But now it has totally switched to where it is all, I would say, relationship driven. Basically, okay, one of the facts is that we have invested in some of the funds in Latvia and Lithuania. So basically, we get a, let's say, on the ground insight from those people who are the teams that they are talking to. But another huge factor that has resulted in very good cooperation is that us as a Latvian Angel Network, we are very much closely working with Lithuanian Angel Network and Estonian Angel Network. We, like, throughout the past few years, we have understood like there's no point in kind of competing with each other's, let's say, scope of startups, etc. So I would say for the past 2 years, we've been actively on a monthly basis sharing between each other who are the startups that we are finding most interesting in our region, sharing them with the neighbors and vice versa. So basically, I would say 90% of the deal flow now actually comes from these type of network relationships. And I would say that the rest of the 10% come either from existing members' recommendations, maybe some teams that they have personally spoken to, and something like that.
We are trying to position LADBAN as a Baltic organization, not only like Estonian or Lithuanian, because for Estonia it is pretty easy to speak from the Estonian perspective, because Estonia is pretty well known in these circles. From Lithuania, they are very proud of being Lithuanian, but we are a bit lagging behind that, so we are Baltic.
Lithuanians are very patriotic, like when it comes to startup investing. Like if there's going to be like a Latvian team, Estonian team, and then a Lithuanian team on, I would say, on an average, on the exact same, let's say, traction or some type of data, they will always choose the Lithuanian first. Yeah, it's kind of an interesting perspective from them.
Yeah, for example, the last startup we are now negotiating, it's Estonian startup. We also try to show that we are like not focusing only on Latvian startups, but on the best. So, and we believe that it will be very good.
Other questions?
Due diligence. So there is a team that does due diligence, and when? You said in the beginning you do.
Yes, we do due diligence. There are 3 of us, in fact. Me, Girts Līcis, who will be also presenting next time, and Emils also joins quite a lot. And we try to do due diligence. I have legal background. I have done really a lot of due diligences in my life. Girts is a business person. He has also quite a lot of experience in various businesses.
But I would also like to know that for various of these startups, of course, it's I would say easier to do due diligence on a, let's say, regular software-based B2B SaaS business. But when it comes to different domains, we also usually try to involve some of our members with the relevant experience to also take part in the due diligence. If they, for example, the Cellbox Labs example, I think it was a pretty good example where one of our members with the relevant experience kind of came in, kind of took control, I don't know if it's the right word to use, took control of the deal and tried to, let's say, navigate the rest of the members in terms of, let's say, understanding whether this is good or not, what are the risks, etc.
And in such a way, this total knowledge base, in fact, is better in a sense rather than for a fund. Fund has maybe some team of 5 or 6 people, and they do all the investments. Probably they do some consultations as well, but we try to do the process very democratically from the one perspective, and also try to utilize the power we have in the community.
Also, it would be worth noting that like seeing like the past 3-year evolution of how the community has like grown from, let's say, around 30 members to almost 100, it has also changed on which are the startups or the sectors that we actually look at. So basically, the primary startups that we select for, let's say, are these on-site pitching opportunities, etc. They're all pretty much based on our members' collective backgrounds. What are their interests? For example, if like 3 years ago you would ask me or proposed me that, hey, like there's this like interesting health tech company that is doing a funding round, I would say, yes, cool. I mean, I'm happy for them, but I have no one in the community who is kind of interested or understands this sector. But now, 3 years later, it has totally changed. Of course, there might be like sectors like, I don't know, you could be coming to me with the best crypto startup in the world. I would still be doubting like whether this is for our community or not, because there still needs to like be people from the domain, from the sector to, let's say, for this to be interesting too. Yeah.
So I had a question. By looking at valuation, all the companies are pretty much over 2 million at invested. So those are not really small startups. It's already serious business. Like I would think that startup is like, you know, Apple startup, 2 guys in garage start making.
Yeah, that would also be a topic you will discuss in some of the later lectures. Just in very short, there are some minimums, as Maria mentioned, that the target is that at some point of time, the owners should not have less than 51%. So in order to reach that number for Series A, you have to start with pretty big number here, because the company to grow from scratch, they need not like 10,000, they need 100,000. And if we put valuation 100,000, which is actual maybe valuation for the idea, they will lose these 50% at the first point. So these are these valuation numbers. They are
Betting on future.
yeah, sometimes something like more like betting on the future value of these companies. You will have these lectures, and but there is no like very solid background on that. It is more like betting on the future cash flow, future exit opportunities, what you see related to the product on IP and different fronts.
But also to add to this, like most of these investments have gone into the pre-seed stage, basically where the team is formed. There's already some type of working product with probably paid or free users at least. So it's not necessarily idea stage, where there might be only, let's say, a vision and a PDF presentation. And also to note about the valuations, you will see that in the document that I will share, but interestingly, like the 2 million valuation actually for the pre-seed stage is actually for the region considerably low, because
Yes,
for
it
example,
is
the average in Lithuania is for the same stage 5.5 million. And I think it's a very similar story in Estonia, where the pre-seed stage average, based on the funding data collected throughout the region, is also close to 4.5 or 5 million.
And with respect to United States, we have a chat with one fund. They said that they are lucky if they get into pre-seed with 8 million valuation.
Yeah.
So the numbers vary.
But this has also probably grown in the past years due to how much capital the startup actually needs. Like they cannot actually achieve the same results as you would compare like 5 years ago with the same amount of money today, just because of, let's say, how like even inflation has like changed things around, and also the tech stack that you need. So you can also see from data that like the capital needed on the first round has like grown from 150,000 now to up to 500,000. So the founders themselves understand that for that 12 to 18 month runway, they need more capital. So, and also not to lose the ownership for the later rounds, the valuation also kind of proportionally is increased. Yeah. Okay. Other questions? If not, then I guess round of applause to Ants.
Thank you.